Hi, welcome. I'm Don Patterson, the Director of Finance and Administration for Las Virgenes Municipal Water District. I am also the current California Municipal Treasurers Association President. Thank you for joining me today on this agency profile of investment policies. Today, I'm going to talk about just briefly a little bit about Las Virgenes Municipal Water District and give you a sense as to who we are. And then secondly, we'll cover why I have an investment policy. And then I'll spend a little bit of time focusing on the process that we went through to develop our investment policy, and then what we do annually to review our investment policy. So first off, about Las Virgenes Municipal Water District. We serve approximately 70,000 people in western Los Angeles County, including the entire cities of Agora Hills, Calabasas, Hidden Hills, and Westlake Village, as well as the unincorporated Santa Monica Mountains down to the Malibu city limits. We have 122 positions. Our operating budget's $57.1 million. Our total budget for the current fiscal year is $88.5 million. We are unique in that we only have one unrated debt issuance, which we entered into recently. Before that, the district had no debt. So our current total debt issuance is only $10 million. And we have an investment portfolio that averages approximately $100 million over the last few months. And it's ranged between $80 and $100 million over the last several years. So first of all, why have an investment policy? First, I'd like to say that in my opinion and the recommendation of CMTA, every agency should have an investment policy, whether you're a small agency or a large agency, whether you manage your investments yourself or whether you contract that service out to an investment manager or whether you invest solely in LEAF. And why do that? Because you have legal obligations that can be met by having an investment policy. And as an investment officer, a finance director, or finance manager, you have specific fiduciary responsibilities that you need to make sure that you are meeting, whether or not you directly manage your portfolio or not. And also it increases transparency and sets expectations as to what the agency's plans to do and how they plan to use their investments and what vehicles they invest in. So first of all, focusing on legal compliance. We'll go through a couple of government code sections that you should all be aware of as you're deciding whether or not you should have an investment policy. Government Code Section 53646A specifies that in the case of any other local agency, this is any other to a county, the treasurer, chief fiscal officer of that local agency, and then it says may annually render to the legislative body of that local agency and any oversight committee of that local agency a statement of investment policy, which the legislative body of the local agency shall consider at a public meeting. Any change in the policy shall also be considered by the legislative body of the local agency at a public meeting. What's interesting in this government code section is that it says may as opposed to saying should or must. The recommendation of CDIAC and also CMTA is, as I mentioned before, that every agency have an investment policy in order to increase transparency and comply with their fiduciary responsibilities. Next, focusing on fiduciary responsibilities. Agency directors of finance, city treasurers, and investment officers have fiduciary responsibility and personal liability for proper management of the agency's funds. California Government Code Section 53600.3 specifies that all governing bodies of local agencies are persons authorized to make investment decisions on behalf of those local agencies investing public funds pursuant to this chapter are trustees and therefore fiduciaries. So if for no other reason, this is a really good reason to have an investment policy for your agency. But what does it mean to have fiduciary responsibility? It focuses on the prudent investor standard. The prudent investor standard is a standard that we are all held to in managing our district's finances and our district's investments. And what is the prudent investor standard? The prudent investor standard states that when investing, reinvesting, purchasing, acquiring, exchanging, selling, or managing public funds, a trustee shall act with care, skill, prudence, and diligence under the circumstances then prevailing, including but not limited to the general economic conditions and the anticipated needs of the agency. The prudent person acting in a like capacity and familiarity with those matters would use in the conduct of funds of a like character and with like aims to safeguard the principal and maintain the liquidity needs of the agency. So whether you manage your investment portfolio yourself or whether you contract it out, it's important that you ensure that those funds are managed to this prudent investor standard to protect not only yourself personally, but your agency and your taxpayers or ratepayers' assets. Another important legal consideration to establish an investment policy falls under the conflicts of interest clauses. Conflicts of interest are governed by the California Fair Political Practices Commission, which is known as the FPCC. And examples of conflicts of interest are holding personal investments in the same equity positions, using the same broker for personal and agency investments, and making investment decisions that personally benefit you. Within our policy at Las Virgenes Municipal Water District, which I'll refer to as LVMWD, our policy designates employees in the investment process as FPPC filers. And that means that each one of us involved in the process needs to state annually what investments we have that may be in conflict or related to our investments with the district. The policy requires disclosure of any material interest in financial institutions in which the district conducts business. And our policy at LVMWD prohibits us from making investment transactions through the same institution. So for example, if a bank is one of our brokers, then I, as the investment officer for the district, cannot make private trades through a personal investment account at that same bank. And that's really just belts and suspenders to make sure that there's no perception of a conflict of interest or an actual conflict of interest. Some other examples of conflict of interest that you may have seen recently is just this year, or just last year in 2020, CalPERS chief investment officer allegedly had investments in some of the same private equity firms that CalPERS was investing in. Typically, you see treasurers more involved with bribery, embezzlement, money laundering, etc. Hopefully that doesn't happen too often, but that did happen in 2004 in Southgate, where the treasurer was indicted on money laundering, bribery, and wire fraud. And in 2017 in Compton, when the deputy treasurer pleaded guilty to 1 count of embezzlement. So you always want to make sure that you are definitely above board. There's no conflicts of interest, and there's no specific wrongdoing when you're guarding and safeguarding the assets of a public agency. And then lastly, before I get into the development of the investment policies, transparency. Transparency is very big for the district, and it's very big for a lot of government agencies now, with various transparency initiatives and more access to website and web-based interactive programs that show the current status of budgets, investments, etc. Under Government Code Section 53607, it specifies for a monthly report, and that section specifically says that each month you shall make a monthly report of the transactions, of the investment transactions to the legislative body. So that I've seen a pretty simple report which simply shows the transactions, and then later in our reporting section you'll see a more detailed report that includes analysis. Quarterly reports are governed by Section 53646 of the Government Code, and that section again says that the Chief Financial Officer may render a quarterly report. However, it is strongly recommended by CMTA, and it's also recommended by CDIAC. If you do a quarterly report, there's specific things that you are required to include in your quarterly report, such as the type of investment, the issuer name, the date of maturity, the par amount, the dollar amount invested, a description of the funds invested, current market value, a statement of compliance with the investment policy, or non-compliance. If it's non-compliant, you need to provide an explanation as to why. A statement of the local agency's ability to meet its pool's expenditure requirements for the next 6 months, as well as an explanation as to why sufficient money will not be available if that is the case. If you want to see those in detail, they are, as I said, in Government Code Section 53646, and they are also in CDIAC's Local Agency Investment Guidelines, which provides a handy source for most of this information in this presentation. Focusing now on developing an investment policy. What I'm going to walk through now is what the district went through and the process we went through when we were developing our investment policy back in 2015, and then it was significantly revised in 2017, and since then has not had significant revisions. So first of all, we identified the needs, then we reviewed the requirements, developed the policy, established roles and responsibilities, and established reporting. Identifying needs. When I first started at the district, and I was looking at the investments and the investment policy that was in place at the time, the question, first was, what investments did the district have? At that time, we had primarily callable agencies and LAIF. And then what was governing those investments for us at the time, it was a municipal code section, an administrative code section that was adopted some time ago that broadly outlined the policies that you find in the model investment policy. So it was a lot less specific than what you see now in investment policies. The established investment strategy was to buy and hold. And then the last question was, how were the investments tied to cash flow needs, if they are? Some agencies are smaller and don't have full-time resources to dedicate to an investment policy, focus on a laddering approach. And that's what the district had back then, was basically a ladder portfolio. And a ladder portfolio, which is covered in other sessions, is one in which you generally have even maturities throughout time so that you have predictable cash flows. Secondly, review requirements. This is a very important section because you need to know exactly what you should be putting into your investment policy. Both CDIAC and CMTA have numerous publications on investment policies. On the CDIAC side, I would recommend you looking at the California Public Fund Investment Primer. That details investment public funds in California, and it has sample documents and sample RFPs. And I've actually used those sample RFPs. They're very handy to not have to start from scratch. They also have the local agency investment guidelines, which is updated through 2020. So I would highly recommend that you look at CDIAC's local agency investment guidelines. On the CMTA side, we have the investment policy certification program on cmta.org. If you look at investment policy certification program, you'll find a site with sample policies and also with the requirements for complying, making sure that your investment policy meets the standards established by CMTA. Within the state code, government code sections 53600 through 53997 is generally the code section that provides this details for what is required in investment policies and managing investments. And also, don't forget to look at other agencies. It's always a good place to start to see what your colleagues in similarly positioned agencies are doing. But it's also important to remember that you can't just copy policies from other similar agencies, because their politics and needs are probably different than what you have in your particular agency. But it is a good place to start to see examples of final work product. Next, developing the policies. This is the section that took us the most amount of time. We spent quite a bit of time when we were developing our policy, really focusing on what is it that the agency wants to do. Do we want to be as broad as state law allows, or do we want to be a little bit more restrictive than state law? And while you're developing your policies, you really need to understand what the risk tolerance of your elected body is and whether or not they have any preferences for types of investments in order, or preference is to not invest in various things, depending on what the politics of the agency are. Within the scope, it's important to specify exactly what the investment policy covers. In our case, the investment policy covers all investment activity and financial assets of the district except for pension funds, other post-employment benefit funds, funds related to debt issuance that are controlled by specific provisions of the issuing documents, and our deferred compensation program is explicitly exempt from our investment policy. Every investment policy has similar objectives. If you haven't heard them yet, you will hear them over and over again. The three main objectives are safety, liquidity, and yield, or return on investment. In our case, and I think in most cases, the preference is in that order. Safety is by far, first and foremost, the primary goal of our investment strategy. Liquidity is the second strategy, making sure that we have funds available when capital project expenditures or other large expenditures occur, so that we don't have to liquidate funds or sell any type of holding in order to meet that liquidity needs. And yield or return on investment is our last concern. We try to maintain a market rate of investment for similar types of investments. It's important within your investment policy to develop standards, whether that's standards of care, how you authorize dealers and institutions, how you select dealers and institutions, how often you go out for dealers and brokers, and basically how you set up those controls to make sure that your investment policy is meeting the standards that are recommended. Authorized investments is another area where at my district we had a lot of discussion. As I mentioned, we initially, when I got here, had all agencies and then LAIF. And we wanted to expand that a little bit, and we had actually quite a bit of discussion at the board level about what types of investments we should invest in and how we should invest in them. So we looked through all the allowable investments that are provided for within the California code. And at our district, the board wanted to be more conservative than what the code allows for. So we can only invest in a portion of what's allowed within the code. So we invest primarily in municipal bonds, agencies, CDs, and pooled investment accounts like LAIF. We do not and cannot invest in corporate bonds, supranationals, or short-term securities. So we have a very strong buy and hold strategy and very limited on what we invest in. And then other considerations that your agency may or may not be interested in is ESGs, which are environmental social governance. That is a growing area which has been expanding for about the last decade, where certain agencies focus more or less on meeting environmental social goals within their investments. And then some boards and councils don't want to do business with certain companies or companies that do business in certain areas, or want to promote doing business or investments in companies that do things. So an example of this, at another agency I was at, there was some policies in the state of Arizona, which the council that I worked for was not in favor of. And one of their actions was to de-invest from companies that did business in that state for a period of time. And then they also had direction to de-invest in fossil fuel companies, for example. So using in that case, the city's investments towards social and other goods and other goals, it was important. And that may or may not be important for your particular agency. Diversification is another important aspect, and why we wanted to broaden what we could invest in. It's important to be diversified to reduce risk, whether that be credit risk or reinvestment risk. You want diversification maturities, type of investments, and whether or not you're in investment pools or not. And internal controls are very important, and we'll talk about that in a second, and reporting. So establishing roles and responsibilities. This is one of the most important things you could do in making sure that you meet those internal controls. Who has oversight? Is it a treasurer, an investment committee, a chief financial officer, a city manager, or a general manager? And you want to make sure that you have separation of duties. Who does what? Who has access to what? In our case, I make the investment decisions and authorize the purchase. I have a senior accountant who processes the transactions, a finance manager who approves moving funds to purchase those, and then we have a monthly report that goes to our treasurer, who's a board member, for review and to the entire board. And then I touched on this a little bit earlier, but you want to make sure that you do requests for proposals for brokers, dealers, and safekeeping. At the district, we have to do that once every 5 years because for ongoing services, we want to make sure that we don't get too comfortable with one particular company. And then you want to make sure that you're still getting the best service that you can. In our case, the last time we went out to RFP, one of the things that we wanted to make sure that we had was what types of educational offerings did the various brokers offer to their clients to make sure that we were kept abreast of the current market conditions and standards that we needed to be aware of. And if you outsource portfolio management, you want to make sure that you include standards and investment policies you expect them to follow and what tasks you expect from them on a weekly, monthly, or quarterly basis, and what controls do they have. Because as I said before, even if you contract out your investment, you still have fiduciary responsibility to make sure that you are safeguarding the public's assets and money. And lastly, establishing and reporting. What type of reporting do you want? Monthly, quarterly? What do you want to include? For our district at LVMWD, the reporting is very important. And actually, so we're going to switch here to an example of our monthly report. So we do a monthly report and we actually provide the same type of information every month. And then we just have one little difference in our quarterly report. So we have a summary section, but really what is most meaningful to our board and stakeholders is we try to balance between providing a visual representation that could be discerned quickly so that people can see, what's going on with our investment portfolio, and then we also provide a narrative to specifically show what is happening with our investment portfolio. So we always compare year over year. So in this example, our total portfolio yield has been dropping, and then we have the current year versus the prior year so that you could see easily how we compare over time and where we are today. And then we break that down into annual yield investment portfolio. And basically, for every aspect of our portfolio, we do the same thing where we could provide a visual presentation and also a narrative with more specific details. So that whether or not you just want a quick look to see how we're doing, or whether or not you want to see the exact numbers, that information is there for you. And then one thing that's interesting is just to see how our investment portfolio tracks over time. We also wanted to look at it from a constant dollar and total portfolio size. And what you can see is the district went through a period of high capital expenditures where we drew down on our investment portfolio. And now we've been building it back up in anticipation of a large project that we are currently in the early phases for, which will cost in excess of $100 million and treat recycle water to drinking water standards. So our board has taken the position to build up our investment portfolio to be able to reduce the amount of debt that we have to take out to fulfill that project's goals. And then just scrolling through really quick, quick snapshot of the diversification. You can see LAIF is a big portion of our portfolio, as is CAMP, which is another pooled investment program, and then agencies, municipal bonds, and CDs. And that is basically all that we invest in. It's important to show diversification amongst the different issuers. You don't want all your agency money in one bucket. You just want to spread it out a little bit. And then sometimes I throw in a special chart or graph just to show something of interest. We have quite a few municipal bonds now, over 20% of our portfolio. So we wanted to see how diversified our municipal bond portfolio was. And not surprisingly, 75% of it's in California, but you can see in these other yellow yellow spaces where we have expanded outside and invested in other states. And then we also wanted to see what exactly were we investing in our municipal bonds. So one direction from our board was to try to invest in helping water and wastewater agencies when those bonds were well rated. So we have 16% in water and sewer bonds, all revenue bonds, all highly rated AA or better agencies. And that's just a reinvestment into the particular government industry that we're in that our board wanted to make. So you can see we basically, through our investment monthly report, try to get into detail in a level that's understandable for any of our diverse stakeholders, whether it's the board or the public. So after you develop an investment policy, it's important to review it annually. We review it as part of the budget process, which makes sense for us because we review all of our financial policies at the same time. And then we confirm whether the policy still meets the needs of our agency. And we have a committee, well, basically at a board workshop, we review the investment policy and we recommend any changes that we want to make, if any, to the board at the budget workshop. And every few years, they approve changes to the investment policy, whether it be little tweaks or major revisions. And then at that time, we revise our investment policy and bring it forward for adoption. So thank you very much for your time. And we look forward to your participation in the next webinar in this series, From Policy to Construction, Portfolio Structure and Diversification. Thank you.